Let's go over how the markets reacted to US inflation data. US PCE price index came out slightly lower than forecasted, but mostly expected. If we take a look at core PCE year to year, it was forecasted at 3.7%, but then came out at a 3.5. That's the slight difference. This does show that slight decline in inflation. This is exactly what the Federal Reserve wants in order to not hike interest rates. So this is what gave the US dollar that bearish fundamental outlook. Now the markets is just bracing for potential rate cuts in the near future, as long as inflation continued its downtrend. Core PCE and core CPI has been in a downtrend since January. But where rates are now, the question is this enough for the Feds to continue to pause rates? Or do you feel that there's another potential rate hike coming? Let me know in the comments what you think. But that's the battle between the Federal Reserve speakers. You got one Federal Reserve speaker, on the other hand, saying inflation is on a downtrend and we shouldn't have to hike rates. Then you have another Federal Reserve speaker saying that we should hike rates one more time because inflation is still out of control. That's the battle that we're dealing with. This is why we see US dollar acting all choppy. This is why we see US equities move up and down, because of that battle between Fed speakers. But the markets, on the other hand, they're already priced in a full rate pause at 95% for the next rate decision in December. December 13th is that next Federal Reserve rate decision. On the Fed Watch tool, the markets is already expecting the first rate cut to happen between June or May. This is likely if inflation continues in that downtrend, and this is likely to happen if inflation continues on that downtrend. And this is exactly why US equities like US 30, the S&P 500, or NASDAQ has been bullish this whole entire year, because the battle of inflation has been coming down. So what that means, rates is coming down. That is positive for US equities. And this is why we see the US dollar has been declining, because as rates is coming down, that is also bad for currency. But this is the issue. If the Feds react too soon, would that cause inflation to come back up? If the Fed does another hike, would that cause the recessionary fears that we all are expecting to happen? But either way, you should learn how to trade it and learn how to capitalize on it no matter the circumstances. If you like this video and want more, please like and subscribe. And let me know in the comments, where do you feel inflation is going? How do you feel about the markets? Is it reacting the right way? Let me know in the comments.